So for project 2, and to try and give you guys a little bit more insight, I may pick some companies here and there that you guys have actually selected, and do a little bit of analysis myself. Um, just because it's not your company doesn't mean you shouldn't kind of take a listen to these, because it will show you and help you maybe look for things like I look for things, and hopefully you'll find things that I don't find. That's kind of what analysis is all about, is digging in, looking at the numbers and finding um, things that are stand out maybe, but don't ignore, I got to keep saying this, don't ignore the basics either. It's important to discuss those. So anyhow, the company I chose in this case was Starbucks, and I went to Morningstar actually, and you can do Morningstar or FINRA. The results here end up being the same basically. And I started with their income statement. I'm going to limit this conversation just to the income statement a little bit. I think I got one comment on the balance sheet, but because I don't want to get way too lengthy on these, but you'll see, just a little bit of research here. It took me 10 minutes or so this morning to kind of dig around here and look this stuff up, and figure out what I wanted to talk about, which should be similar to you guys then, in figuring out perhaps what you want to write about. And so first I went to the income statement and I downloaded it to Excel, just because it's a little easier to see. I can see things, and then if I want to run some numbers otherwise, I can do that like I did up here for gross profit margin. I didn't label that, probably should have, but this just gives me a much better look at it, right? And so Starbucks, on their income statement, the first thing I want to look at really is revenue. And they're at 22 billion in 2017, and by 2021 they're up to 29 billion. So that's pretty nice growth, right? 1, 2, 3, 4, 5 years. It's increased by what's that? About 40%, maybe not quite, 35%. With, as expected, a pretty big drop off in 2020 as a result, mostly, I'm sure, of the pandemic. Okay, gross profit from nearly 7 billion to a little over 8 billion. Maybe the growth there isn't quite as good, and this may be the reason why. Part of the reason why, at least, I ran the gross profit margin, and their margin here was 30.62, and it's decreased to 28.87. And while it doesn't seem like a heck of a lot, it's almost 2 percentage points, and 2 percentage points on $29 billion, that's a chunk of change, okay? And so that's an important consideration when we look at, gross profit, and it's why I like to look at these percentages. Sometimes just looking at the raw numbers, it's a little more difficult to tell what's going on. So 2020, it would be easy to spend my whole paper in this whole analysis just talking about 2020 and the decrease there. But that's a little bit too simple, I think. That's not to say, again, it's an obvious thing. It deserves mention. Revenue dropped, $3 billion. Okay, I would guess that their operating expenses didn't drop that much, and I can see that we were at 3.5 billion. We're still at 3.5 billion, so just some minor changes there. So, kind of tells me Starbucks probably made a pretty good effort trying to continue to pay their liabilities, continue to keep people on staff, et cetera, et cetera. So their operating expenses didn't decrease, but their revenue sure did, and so we saw a resulting decrease, obviously. And I'm going to scroll down, earnings per share, right? But as I was looking at that, I got down to this part, and I kind of glanced, and I said, "Oh, that's kind of strange. We went from $2, nearly $2, to $3.27, but in 2019 we had a decrease of." Wow, a decrease of about 30 cents per share, and that was before the pandemic, and so that actually caught me by surprise a little bit. And so I wanted to go kind of take a look at that and see what the heck was going on. And first, right, I'm going to back up a little bit, because one of the main things is that's a huge increase, right? From $2 to 327 to 295. If you told me that 2 years ago you were at $1.99 and now you're at 295, that's a nice increase. So one of the first things I kind of needed to look at was, well, what happened that made 2018 such a good year? Okay. And I came up and I did a few looks at some things here. And I came down to this note, and it says irregular income and expenses, an increase of 1.651 billion, right? The year before, they'd actually had a negative in that category, and they also had a plus of, nearly $500 million. They did have some restructuring and reorganization, which they kind of have every year. But then they had this merger and acquisition income or expense. And so they had a huge increase, really, in some irregular income expenses. This is the whole. This is the total, the 1.6. You net these out, and it should come up to that 1.651. So, maybe my first analysis isn't that 2019 was a bad year, but that 2018 was a banner year for some reason. And so to take a look at that, I needed to take a look at their 2018 annual report. And I read through, again, here I'll start you up here. I come down and I find I kind of look for this, management's discussion and analysis of financial conditions and results. Starting on page 24, I'm on 3 here, so I need to go to 27 actually. And I read this, okay, where I've highlighted. Now, obviously, I had to read through quite a bit to get here, but earnings per share for fiscal 2018 increased to $3.24. The increase was primarily driven by the gains from the acquisition of our East China joint venture and the sale of our Tazo brand. Okay. Additionally, the net favorable impact from the Tax Cuts and Jobs Act also contributed to the increase. Let's go look at that tax thing first. Okay. So their income was up quite a bit, but their provision for tax decreased by, a couple $100 million actually. And so that's a pretty big deal when your income goes up that much. The other items had to do with increases from, gains from the acquisition of their East China joint venture. That one ended up being kind of interesting. When again, I got to scroll down, and I had to get to part 2. I think it's page. Let me stop here. So the revenues. Part of the reason for their increase was in revenues. I'll stop here. This is kind of a little bit of a sidetrack, but was because they had owned, I think, 50% of their China, Asia, Pacific stores with a partner over there. They bought out that 50%. Obviously, then that increased their revenues. Okay. The other big thing that happened, and this one I think I got to go down to about page 64 or something like that, or 65. Ooh, I got a ways to go yet then, don't I? So here was another thing, right? They entered into an agreement on that to establish a global coffee alliance with Nestle. They received an upfront payment of approximately $7 billion, primarily of prepaid royalties, which was recorded as a liability. Isn't that kind of interesting? To current long-term deferred revenue and will be recognized as other revenue on a straight line basis over the estimated economic life of the arrangement. So Nestle actually paid them, the $7 billion, and they were paid that up front, but they're not going to recognize that all in 1 year. That would be a pretty big chunk, and it would cost them actually quite a bit in taxes, right? And so they're able to take that and defer that out over years. And so it's initially they recognize it, record it as a liability to current and long-term deferred revenue, and then it's going to be recognized as other revenue, so that'll be a negative turning into a positive. Yeah, some of that bookkeeping gets to be kind of confusing, awfully confusing, okay? But that, that's going to increase their revenue for the next couple of years. And what that means, anyhow, is that Nestle wanted to be able to sell some of the Starbucks products, the beans and stuff that you might find, or they're going to distribute those. Okay, makes sense. Nestle's got that type of distribution capacity, right? They're already sending candy and coffees and those types of things to grocery stores and whatnot. Whereas Starbucks is more of a retail, coffee shop operator. So, they can sign this deal and Nestle can take care of those things. It makes quite a bit of sense, and Nestle will make a little bit of money, but obviously they will also pass along a lot of that money to Starbucks itself. This was interesting. Then as a result of the acquisition, this was their 50% that they bought from the Asia Pacific segment. They bought out the other 50%, right? And then you read this little footnote, and it says, as a result of the acquisition, they remeasured the carrying value of their pre-existing 50% equity and investment to fair value, which resulted in a total gain of $1.4 billion, not subject to income tax. Okay, and was presented as gain resulting from acquisition of joint venture on our consolidated statements of earnings. Boy, did we see some unusual income. 1.4 billion roughly. Okay, and also I wanted to go back and look. Then I should see something like that on the balance sheet in 2018. And so I'm gonna, this time I just left this. I didn't download this. I would if I were doing it, but that's probably going to show up in intangible assets or goodwill, right? There's probably not hard assets there, but it's a valuation based on what they paid for that. So they're saying that what they paid for the other 50% that they didn't already own, they paid the 1.4 billion. So the 50% that they did own should be worth that. So you should see a pretty big jump up. Oh, goodwill, there it is, from 1 point. So they actually had about 2 billion in jump. So they probably purchased some other things that also had some goodwill involved in it, and so it increased by 2 billion because these are in billions. That kind of answers that question. So, there's some interesting things going on there from 2017 to 2018. Again, you can't probably spend full page talking about that. You could easily. You're going to have to condense that to a paragraph or two so that you can talk about the other things that are going on. Their normal revenue growth, their normal, again, their gross profit, how that's being impaired a little bit, what's happening to gross profit through the years. I don't know. They probably talk about that some from year to year in their annual report. 2020, we know what the problem was there, but these things have decreased. They had a little bit of a bump up right from 2019 though to 2021, so they were able to probably get a little pricing power, probably a few things like that. Margins are probably, competitive, and all those things probably were just getting tougher through here. And again, they'll probably discuss those things in the annual reports that you guys should take a look at. I'm going to wrap that up because I'm sure I'm probably quite a bit of time already invested in that. Yep, 13 and a half minutes. So there's one example of some things that you ought to take a look at with your company. And the only way to get good at it is to dive into it. If you got specific questions, one of the reasons I picked Starbucks is because I had an excellent question from one of the students writing about that. And why does Starbucks have a negative ROE? I'll leave it for another day, but the short answer is Starbucks actually has negative equity. Whoa. But on the other hand, it's worth $90 billion. Interesting.